Thursday. Final hour session. It is just after 3 p.m., 3:01 to be exact, and it is Thursday, September 4th. Thumbnail today, September all-time highs. We've had the market down about 2% from recent all-time highs. We had the July 31st to August 1st correction down about 3.3%. We are just within a whisker of these all-time highs again, with non-farm payroll coming tomorrow. ADP job numbers were bad. All it's doing is cementing the probability of a rate cut by the Fed on the 17th. Does this market melt up for the first half of the month and sell off the second half of the month? Timing is everything. Maybe I'm, trying to be too bearish too early. Maybe I'm trying to be, calling the top too soon. And again, I'm not calling the top. I'm just looking for day trades. And today we will see how this market wants to close out for the close. Want to share a couple of charts here. So it's been a pretty active day overall. I do have a couple of bear call spreads that have been filled. So let me take a look. I was filled at a 64.75 bear call spread, 64.75 by 64.80 for $1. That is upside down right now. I was filled at a 64.85 by 90 for $1. That trade is upside down right now. We still have an hour left. Let's see where the market goes into the close. If I take a look at this chart here, I've also got a couple of other spots that I'll share. This is all for daily profit play. We have exceeded the call walls today by a reasonable amount. It'd be nice to see price come back and settle at 64.80. Let me bring up my dynamic trend software and see if we have any levels lining up around 80 or 75. If not, we might just sit here and melt up and close at slightly higher highs. So here we are for the day. Order levels just kind of stacked up between that 80, 85, and 90. Just the slow grind. And, sometimes this is super annoying to me when a 0-day environment with market makers, they decide to roll the risk to the next day, and they'll probably fade this move tomorrow. But in a 0-day environment, we're hedging here. Markets might top out tomorrow, then fade. I still think 6,500 is a pretty keen level. We've got some trades running for a Friday and Monday expiration. I think those trades actually look pretty good, and we have some profit traps on them as well. So even if today is a day to manage risk, it'll be okay. I mean, if I net on the day, let's just throw a hypothetical out there. If I see price back below 64.85, I'll keep $100 on my one bear call spread. I'll lose $4 on the other trade, so I'll be net down $300 today. Trades that are still filled, I have 3 broken wing butterflies for Friday and Monday. Those were all filled. I posted this in trades today. So now just a quick DPP update. 2 bear call spreads for today. Sell call at 6475. Buy call at 6480. $1 credit. Still managing. Okay. I mean, the worst I can lose is $4 on the trade. So if that happens, screw it. I don't want to lose. Obviously, I want to see price respect the highs and actually try to sell off another 5 or 10 points for the close today, but I don't know if we're going to get that in the next 55 minutes. Sell call at 6485 and a buy call at 6490. $1 credit. Still managing. Ideally, price falls to less than 6475 for profit on both. Let's see. We also have 2 broken wing butterflies. I think it's actually 3 now. I think I have 3. 3 broken wing butterfly trades for Friday and Monday expiration. The pin prices at 6425, 6435, and 645. I'm sorry, 65. So 6525, 6535, and 6550. Each for $1 credit, each with potential $5 profit trap, and hopefully price will be less than 6525 at expiration. Okay, so a little update there. What I'd love to see price do for the next 55 minutes would be have something actually matter up here and see if price can fall another 5 or 10 points. Ideally 64.75 gets me full profit on both my bear call spreads today. If price is just going to sit here and freaking grind all day and I'm going to lose, I could be down as much as 800 bucks. That's worst case scenario. If price is above 64.90 today, I'm going to lose $4 and $4 and I'm down 800 bucks. That being said, I still have about $1,500 in profit traps on the bear call spreads. There's another $300, which will help me kind of offset some of the risk. So that's what this trade is going to look like. I said this morning, the VIX rule is 16. We could possibly push up to like 65.10, 65.15. We're clearly not there, but looking at the technicals, I mean, I'm not terribly surprised to see price trying to get back to this level. So, I mean, and that's not a reason for the market to all of a sudden turn and fall, but hitting this level or filling this gap, do we come up here and then we fade going into Friday, Monday, and next week? Possibly, very possible, right? So today could just be one of those days where it wasn't in the cards to make a winner. The market didn't want to respect the ceiling. There's no rejection. There's no resistance today, and it just melts up all day. So we'll find out more in 53 minutes. I'll stay with you till the close, right? But I've got some trades in, got some trades running. Bear call spread. Took a trade for a double up that I'm looking to see if we get to 6,500 by tomorrow and try to double that trade. That is a set profit at 60 cents. So I'm in for 25 cents if I get out for 60. So it would be 60 minus 25. That'd be 140% winner. I'm trying to get that for my double up service. Broken wing butterfly with the pin at 65. Broken wing butterfly with a pin at 35. And a broken wing butterfly of pin at 40. And I have a pending one, which is trading right around that. I mean, it's right there at 95 cents. I'm looking to see if this will fill for another $1. So that's a 65.50 pin price for Monday the 8th. So this is close. This might actually get filled before the end of the day. Okay. Grasshopper, I see you in my Discord. I don't know why you're calling me in. Oh, I see. That's Nick. Okay. Price is hitting 64.90. Just had a chart alarm go off. There it is right there. Looking at the VIX today, it's just been steadily going down, up above all my call resistance, real-time levels filling up as we go. We're above the 50% ATR. We're now at like the 75% ATR on just a slow grind day. I mean, it is what it is. It is frustrating to sit here and see what looks to be a very good correctional time and just not see the market cooperate. And it will. It will. It's just how and when. Okay. So how possibly poking highs and then falling. That'd be the same type of pattern we've seen here. Fall, rally, fall, rally, fall, rally. That structure breaks. We go lower to the downside. Right. So anyway, it was right on the verge of that rising wedge, and there is my rising wedge. So could we go a little bit higher? Yeah, we could go a little bit higher. We could poke all-time highs, and then I think we roll over. So if I'm wrong, it's my job to manage my risk. So if I lose a couple of bucks today, I'm okay with that. It's annoying, but I will likely recover it within a few trades. So I'm trying to keep the risk small. Today has done something pretty unusual, which is just there's no ceiling, there's no resistance. It actually exceeded the market maker move all day. It is what it is. So the direction on the VIX was lower. Let's take a look at the morning. Pretty choppy price action. You go to 9:30. So VIX was down, VIX was up between 9:30 and 10, but it proceeded to go lower for the remainder of the day. So direction was just a melt up all day. All right. So where are we at? Let's go currency strength. I ran an interesting test. If I've got any waterfall income traders that are with me, I'm hosting a webinar on Saturday for waterfall income, and I ran an interesting test that I thought you might be interested in seeing. just over the last, I'm trying to think here. This is the last 12 years of options data that I have. This is one of our core strategies. This is core strategy number 1, and it's a pretty good return without taking a bunch of risk. So I can certainly make a lot more money than this by scaling up the contract sizes. But as far as defined risk, this is literally a one contract on $100,000 account. So I mean, if I was to say, for every trade, I mean, this risk, by the way, is maybe about $300 risk. Okay, so $300 risk, $300 risk out of a $100,000 account is risking about 0.3% every trade. That's not a lot. So you got plenty of capital here. And if I wanted to, I'm not saying to optimize this, but it's like, okay, just got filled that broke wing for the 8th. We're at freaking 64 now. All right, let's go, baby. All right, broken wings. Time for you to do some work. I'm going to edit this one and filled on 9/8 expiration. Broken wing butterfly with the 65.50 pin price for $1 credit. All right, I'm going to drag this over. I got to get some trades in for my tracker. So let me go to my broker platform, go to filled. I've got to get these in. So we've got the 2 bear call spreads from today. I'm still waiting to see. This one is still working. I haven't been filled at $4, but it's close. This is a 64.85 by 90. I could just be wasting another $100 if I get this trade. But I don't know. I'd like to see maybe this. I'll be really picky here, but maybe get filled for like $50. So I'm willing to take on just a tiny bit more risk on the day if I have to. Realistically, though, with the next 45 minutes, if prices keeps going higher, this is probably a crappy trade. So let me do something like 475 and risk $25. And we'll see what happens in the final, 45 minutes. Trades I need to update for the tracker. We've got the 2 bear call spreads, and we have some butterfly spreads to add in. So trades 454. Took them today. Center price 64.60. I have the trade here that was filled. I'm going to put this one in my tracker. That is a 9/5 expiration. 65.20. Sell the 65.25 call. And then buy the 65.40 call. Okay, so that is max would be a 10 wide width, and I pulled in $1 credit. Next trade, 455, 94. I have the 9/8 expiration. 9/8 expiration. Buying the 6535. Selling the 6540. Buying the 6455. Okay, so 10 wide, $1 credit. I've got one more on top of that. So that one's in, that one's in. One more for Friday, one more for Monday. So 456. All right, I'm just adding this into my daily profit play tracker. This is a 9/5 expiration. Buying the 6530. Selling the 6535. Buying the 6550. It's a call. So if you're in the trade tracker for daily profit play, you'll see me entering these in right now. And I've got one more. Nine, 4, 6460. SPX with a 9/8 expiration, which is Monday. Buying the 6545 call. Selling the 6550 call. Buying the 6565 call. And that one actually went a little bit larger. So I went 2 contracts in that one versus the 1, 1, 1, and 1. So basically what this means is I've got some expirations out here that I'd love to see price stay. Where'd my trade go? Not this one. Where the heck do my other workspace go? Let me find it. Where did my chart go? Here. Here we go. So this one is at 40, and then I'll get another one at 50. So copy and paste. Oops, it's way up there, and 65.50. All right. So levels here that matter for daily profit play. We did broke wing butterflies for Friday and Monday. If any of our profit levels are hit, there is potentially, so this is $1, $1, $1, $1. So I've got $400 worth of profit here as long as price is below 65.25. I also have a profit trap in this entire zone. So this trade offers up potentially a $5 profit trap, $5 profit trap, $5 profit trap, and $5 profit trap. I'm not going to hit all of those. Okay. What I'm looking for though, is if I have a profit trap and I can hit one of them, if I can see some winners, great. If I can hit a profit trap, ideally I'd like to hit a profit trap on this one and not the higher ones, because this one has about 900 in risk, and this would end up making me 500 plus 100 plus 200. So I'm essentially going to be break even, which is kind of annoying. So I hope that what we're going to see here is a market that's going to start hitting resistance and then fading back down. Okay. All right. So if we were sitting, this is one thing I'm looking at for literally today, is if we were sitting right here at this gap fill, I think the markets would be able to come down a little bit. We still have 40 minutes left. This, might give us a lucky little trade at the end of the day if the market's going to fall. I need price to fall about 16 points. Part of me hopes that it does, given what the market made set today, which was about a plus or minus 22 points on the day, and we are beyond that. So with the open, from the previous day's close, plus or minus 22 points, we're at 45. So obviously we exceeded that. At the open of the market, so here, plus or minus 22 points, we're at 35. The day isn't done. So how we close, as I say, amateurs open and pros close. It'd be nice to see if the pros step in, market makers step in, do their job, keep the market contained. I'm curious to see where that close would be. If we're right at that 21 to 22 point market maker move, that would be putting me around 81. So I might still take some heat on my credit spreads today, but looking a little bit better going into non-farm tomorrow. It'd be lovely to see the market getting below, 80. I ideally like to see hit this chart alarm at 75. If we're in session right now for the next 40 minutes and we hit 64.75, what I'm going to try to do for my daily profit play is the trade that we have in for 64.75. If I can manage a net winner on the day. So if my 64.80 is close to $80, $90 and my 64.75 is net less than that, meaning like I'm up $80 in one trade, I'm breaking on the other, I'm just going to close the two trades out. Okay. But if prices keep going higher, 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 and it closes here for the highs of the day, I'm going to take two manageable losses. And it's going to be annoying, but it is what it is. I'm not going to double and triple down. I'm just going to let price do what it needs to do today. I'm hoping that it wants to fall and get at least some type of resemblance of a ceiling by the end of the day. But to be determined, and hasn't happened yet. Okay. All right. So that's that. I'm trying to think what else. Good masterclass series this week on Wednesday, Thursday. Did a double up service. So double up masterclass. We talked about the two core strategies. Did a lot of examples, lots of flashcards. That now gives us over 5 hours of masterclasses in the last couple of weeks. If anybody's interested in only taking trades with low risk, high reward setups, that's a great class to have. Time is not your enemy. Time is your friend. And we have trades that offer up potentially 5 to 1 or 10 to 1 plus trades. So there's a really simple game plan. I do lots of good examples like sequencing. You start the day, you find your directional flow, you position a trade for high reward, low risk, and your job is to manage winners because risk is always really small. Okay. We had pinch point last week for master classes. This weekend on Saturday, I'm running a webinar for waterfall income. I wanted to show you this. So we did a class, I think last week or 2 weeks ago on waterfall. And all I did was I just increased the frequency. This is a debit spread. Everyone asks me, Chris, what about the assignment risk? We can always do this on the SPX for no assignment risk. You can always do this on XSP for no assignment risk. I don't mind taking trades on the SPY or the Qs because I don't mind owning the shares. I have enough capital in my accounts where if I needed to take at least, it's not a lot of shares, but I'd say if I needed to take at one point in time 100 shares, I would take 100 shares and then repair it. In fact, I have that. I've talked about this in some of these webinars. For waterfall income, I have one trade in particular that I took a loss on. Let's go here. All right, let me check these out. So Google, Nike, Broken Wing. It's Berkshire Hathaway, MicroStrategy, Microsoft, Tesla. Here we go. Okay, so my break even. I own shares, so I took a loss of $330. Okay, that's what I'm down. This was December of 2024. This trade is now worth right at $4,900. So if I don't do anything by the end of September, this trade is worth $4,900. So if I subtract, actually I need to add 4,900. I would turn a loss of $330 into a repair of 4,570. I'm not going to stop there. I'm going to keep adding to this trade, repairing this trade, using my advanced trade management, strategy that I talked about in this class, and just continue to add the income side of this, where hopefully this becomes like $5,000 worth of profit or $5,500 worth of profit. I'll just keep generating income from that position. Now, the nice thing is I can afford to own those shares, and that's why I did it. So there's ways to have like a plan B and a plan C to have a backup plan, and that's kind of one of my favorite things. Okay. What else? Adrian says, got cooked on Bitcoin today, trailing stops, Dow Jones. All right. What happened on Bitcoin? I mean, Bitcoin's down 1.59%. How big and how small term are you trading? I mean, it's 1 day. So what's your trade on Bitcoin? You trying to grind this thing higher? This hasn't even broken a trend line yet. We're still in a pullback mode. This trend line hasn't broken at all. I guess here. I mean, if you break this more aggressive trend line, I don't know. I'd have a stop loss below the swing or below this 200 moving average. Or if you want to be more patient, you look for price to find the 200 moving average. You can buy it really small right there, or be patient and wait for this to break. We break above. This is what I oftentimes look for. If you want to be patient on a trend strategy, you look for price to, I like the 144 and the 200 moving average. So if we break below here and then close back above it, that's a great entry. Stop loss below, resume the trend to get to the highs. If you're a trend trader like that, I mean, that's like turtle trading 101. You get a close below, close above, take the trade, tight stop loss, go after highs, ride the trend out with your stop losses. Very, very tight risk, right? That's trend trading 101. All right. Are we going to hit freaking 64.95 today? What a just annoying market, man. And so, I mean, I say this like tongue in cheek, but like literally we're only, I mean, what was our recent all-time high? Teens? 65.08 was our all-time high. I mean, we're within 16 points of all-time high and it's freaking September. Is this our September effect? Market's down 2%. Oh my God, the sky is falling. It's September. I mean, this is nothing. So I'm curious what the noise looks like. I'm curious what the historical average is. And again, maybe that's why it's not going to go down. Everyone thinks September is going to be a terrible month and the market just does the opposite, right? Everyone thinks the market's going to be down from a recession and it's just, you never know. And right now it's like, it's crazy. It's like you're managing risk both ways because it seems like this market shouldn't really go any higher based on the technicals, and yet it still is. So anyway, we'll just take a bunch of trades. Got trailed out for 1,000, was up 3K at one point. Gotcha. All right. What about Ethereum? Ethereum had a 5-wave move. This thing should be pulling back with an ABC. 1, 2, 3, 4, 5. I'd expect an ABC correction. So it's not something I want to sell. I think Ethereum is look for your dynamic support in here and look for those trend signals to resume between like 4,000 and 3,500. I know that's a wide zone, but look for some confirmation in that window versus I just think it's way too high to be buying it. I think pullback. So we'll see. Let's go gold and silver. Gold had just a ridiculous run these last 6 or 7 days. It's still up to all-time highs. It's still near them, but it's down about 0.26% today. Uh, Look, I like gold. I took actually some fresh trades today on gold. Put in some ratio spreads at the 280. So I did GLD. I did a 280. I think I did a 285 by 280. So a 285 by 280 ratio spread and a 265 by 260 ratio spread. So I'm willing to own shares of GLD at 280, which would be way the heck down here. That would be a 14% discount from current price and all the way down to 260, which would be about a 20% discount. I don't know if gold is going to continue just to march higher. And if it is, cool. Enjoy the run, trail stop losses. If we start hitting 3,800 or 4,000, I am going to be moving stop losses. Because if we hit these levels, I think we pull back all the way to this 200 moving average. And we run into like a big old capitulation move to the upside. Okay. Joy says 0 DT on SPY selling premium. Yeah, we'll see. Like I said, I mean, I mentioned this in Telegram today for my daily profit play. Look, I mean, the market did something out of the ordinary today. It hasn't respected the call wall. The day is not done, right? I mean, the market can push all day, and like sometimes those market makers swoop in at the very last minute. Like yesterday, the market ripped up 30. This was 20 to 47. We almost had a 30-point rip in 30 minutes yesterday. So if the market can fall, a quick 10 points or fall a quick 10 to 15, I mean, all it does is put it back within that plus or minus 22 that the market maker set for the day. So we'll see if they respond to these levels at all. I'd love to see price back below 64.75 in the next 30 minutes. I think that's a lot to ask for, but that's why I kept the spreads 5 wide and not 10 wide. 10 wide, I'd be really pissed today. So it's just, I scaled in, if you're with my morning session today, I scaled in, we took good mechanical trades. We were trading at like a 10 delta and prices above all of them. So basically when the morning started, our option chain, we were taking levels at like a 10, 15 delta. And now it's like, that would be essentially getting in to get like a 1 delta. That's how up the market went today based on the option chain. Okay. So point is, running up to some of these technical levels, just shy of these all-time highs, this little gap right here, this little inefficiency as well. This move was, what day was this? The 29th. This was like the gap lower and a big push. This clearly was seen to the market as like a big inefficiency, and the market wanted to come and find it. So once we had a little trough down here, a little reversal pattern, breaks the neckline, it runs up. You got to connect the dots here on futures, and it runs up to this level. And then today it just broke higher. So this support did not act as resistance, right? This support right here today did not act as resistance. In fact, it broke, retested, and then continued to go higher, and it's coming up into this inefficiency. So at the end of the day, it's still price action. We're right up near these highs. I'm still looking to fade this stupid market. I am. And maybe I'm silly. Maybe I'm stupid. But I'm fading with defined risk. I'm fading it with taking stabs and bites and nibbles. And I'm also using, different contract sizes to make sure that even if I take a small loss like today, if I'm going to take a loss, worst case scenario would be an $800 loss. Well, I've got about $2,500 worth of profit sitting on Friday and Monday if I'm right. So I'll be fine. I can generate a couple $1,000s in winners, lose $800 today, and I'm none the wiser. I just keep trading. But the day isn't done. Hopefully a little drop of maybe 10 points would be great. Maybe getting down to respect this call wall, getting below 64.75 would be fantastic. But there's my wishful thinking for the day. Okay. Joy says SPX 64.90. Yeah, I'm watching it. Let's see what happens. So I've got a chart alarm set at 75. Like I said, if I can see the 75 level hit, that might give me a break even on my 64.75 bear call, and I'll have some profit on the 80. If I can take a net profit on the day, I'm going to close it. I've updated my daily profit play alerts. So we now have today's bear call spreads in addition to the 4 broken wing butterflies. So it's been a pretty active day. Today are the 2 bear call spreads, and I've got 4 broken wings for Friday and Monday. So hopefully those levels are respected, right? So let's give market makers a chance. I would love to start watching this in real time and see something like this happen, where if this like 75 level can start lighting up, where this gets like larger and pink, then maybe price can fall back down. And if it does, I can kind of survive the day. So we'll see. But I mean, I know from this morning, the trades that we were taking were literally like, I think a 15 delta and a 10 delta, and they pushed well beyond. So getting up here to a high of 93, that probably would have been like a 5 delta today, maybe lower. And sometimes those days are really freaking frustrating, you know? So I like it when the market respects guardrails. And today it just so far it hasn't. It might at the end of the day, but we'll sit here for another, 28 minutes and find out. Okay. All right, let's go some other stuff. Here's gold. Um, how many of you are long gold right now? And if so, are you scared of taking profit? You want to take profit? You're already out of gold. I'm still interested in buying dips. I think gold is still a great trade. I think I hate the fact that it's at all time highs. I like any dips. So if we get a reasonable dip, find my moving average cluster. I'm still looking to buy it. I think 4,000 is kind of a big round number that institutions would maybe take it to. I don't know if we go there in a straight line. We might make our way up to like 37, might pull back again to these levels, trough here, and then find a way to go higher. But I think 4,000 is a destination. If we have something turn sharper, where maybe gold pulls back in a sharper way, all these levels still offer opportunities to buy dip. Okay. So we'll see. Silver stalling off the highs. We're up to 41.45. There's a pretty key level of resistance at 42. But I really like the technicals of silver. Any dips, any pullbacks, I am buying more. The reason I'm not selling a bunch of puts on SLV right now is because the put premium isn't that exciting. So if I went out right here and said, okay, $32 or $31, let me look out a year. Let's go to SLV. Let's go out to next summer. So next summer, let's go SLV. Okay, so SLV out to June of next year. So either June 18th or June 30th. If I sell some puts and I line them up, sell at 31, maybe even doing a ratio spread. We'll see what it looks like. If I did a 32 by 31, I mean, it's only $65 of income, but I'm willing to own some shares. That's not bad. If I did a 31.50 by 30.50, so I could pull in $1.30 of income, buy 200 shares. My break even would be, I've got to do some math here. My break even is probably below $30. So I go 2 by 1. So I get assigned at 31 minus $1 minus about 65 cents. So I'd own shares of 100 shares at 29.35, and then 29.35. My break even on those 200 shares, if I'm assigned, would be $29. So I could get $1.30 of income, which is fine. I'm not super excited about that. But I'd own shares at $29, and I still think the upside target is, this is SLV. Upside target for me is 44. So I don't think we're going to pull back that aggressively. In my opinion, this is in a bull market. This is a bull run. This would be a 5-wave type move. If we go 1, all this was 2, 3, 4, and we're in 5 right now. So if we're in a wave 5, does 5 get us up into that all-time high? If it does, I'm taking profit here. I'd expect to see an ABC correction, maybe worse. So realistically, I'm probably taking a lot of profit here on silver at $43, $44. Okay. But there's still another like 15 to 20% upside from current price. Any dips on silver? And in fact, I probably won't take that ratio spread because I'm not excited about, $130 of income. I'm more excited about maybe putting on a trade. If we get a dip or a pullback, maybe going to silver futures. Okay. So here's an example on silver futures, $35. Let's see if I can get something on SI. And it may or may not be a good trade. Let's find out. If I went out to May, and futures can stay above 34.50. So if I do a 34.50, 34, 33.50. So that gets me about $1,800 of income. That's a good trade, but silver wise, it's a lot of potential risk with a nasty move in silver. If volatility explodes and on silver, if we had like a copper move, I would be looking at ridiculous risk. So I'm going to have to tighten this up a little bit. This would be a profit trap of $250, $2,500. Is that right? So I'm risking 200 to make. So that's a $1,000 profit trap. Okay, that's not bad. Let's see what I can do here. So 33.50 and go a dollar wide. That's not a bad income trade right there. Not a bad income trade. 82. I'm surprised that probability of profit's so low. 82%. It's kind of surprising. Do I think that we can stay above 33.50? I do actually. 33.50 would be a nasty pullback, but I'm hoping we can stay there. All-time highs. Let me go out to here. I mean, I kind of like the trade. Not really much. I mean, that's about a 1% risk for a lot of my margin accounts. But I don't mind the income. It's Q1. Not a bad trade. I don't know. I'm gonna put it in. Let me see if I can get filled here for like 0.075. That would be $370. So 0.075. What's it increments? 0.07. I can get filled at like the thousandths. So tenth, hundredth, thousandth. So I'll try to play around with that number. So I'll go 0.075. Put this in for my margin accounts. Let's see if we can get filled. 0.075 not filling. 0.074. This is the mid price. 0.073, which is going to put me down to like $350 now. 0.072. 0.071. Now it's down to 340, which is still okay for profit. 0.70 is, come on, dude. That is a winner of 330. Come on. 0.068. I'm just going to wait for a dip. This is so stupid. I'll wait for a dip. I hate doing that, but it's like I hate just going below the mid price and not getting filled. So I'm just going to hold off right now and just wait for a dip. If silver pulls back, this is silver futures. If we pull back into anywhere of these moving averages, then I'll start positioning for a better reward to risk. But I think we, look to buy the dip. All-time highs. That's what I'm looking at. Okay. All right. What do you think of the new Nasdaq rules for crypto, and what does it mean for Bitcoin? I don't even know what the new rules are for crypto. Explain to me the new rules. Are they putting Bitcoin into the Nasdaq? Like, what is happening? I don't see. I mean, I don't know. I just thought it was a separate asset. I'll check some currencies. Yep. Give me a second. Gold. I mean, I'm just selling puts on gold. I'm not buying these stupid highs. I'm waiting. Did I talk to AVGO earnings? No. AVGO earnings are tonight after market. I can look and see what the expected move is. So AVGO for tomorrow, brokers anticipating about a 16-point move one way or the other. I will give you some option expectations. So if we go to earnings, AVGO, so plus or minus $16. We'll just say $16 divided by the underline at 306. Brokers looking for about a 5.2% move. Okay, so 5.2% is what the market makers are showing. Earnings history, the average move is around 12.8%. Now that's the average, but we have seen a lot of single digit movers as well. So I think that it's only fair that we go back to see like what's realistic, right? Moving 12 to 15% on average, that's a blowout type move, but we've got a lot of nines, eights, fives, fours, five, five, five. That's what the broker is actually expecting. So that's really interesting. So what I'm going to look at here is how many times within a day or two has this proceeded with a 5+% move. It's probably very accurate. Nasdaq now requires shareholder approval for firms issuing stock to buy crypto, with non-compliant companies facing suspension and delisting. Yeah, I mean, it's just cleaning it up. It's going to be a tough page for speculators. Honestly, you're going to see a lot of like crap stocks that say they do all this stuff and it's crypto related. It's probably just cleaning up a bunch of scams. That happens in penny stocks quite a bit. They just get delisted because there's just no liquidity, and you dig a little deeper and you find out that they probably shouldn't be traded by retail investors. Crypto stocks plunge on new Nasdaq rules. Yeah, but what stocks? Like, are you talking like IBIT? It's like IBIT still reflects. I mean, IBIT is down. It's down 2%, and Bitcoin is down 1.6. So, I mean, to me, this still looks like a spot price. If I start to see that these ETFs are trading very differently from the spot price, like FBTC, it still looks almost identical to Bitcoin. Now, if you're talking, Riot, and you're talking Mara, and you're talking some of those like, I guess just associated stocks that are, I don't know, and like MSTR. I mean, what happened here? MSTR is down about 1.26%. But we know that this one is certainly way more leveraged for a Bitcoin proxy than the spot price of Bitcoin. So anyway, AVGO, let me go back to this. So let's go AVGO. How many times has AVGO hit? So I see a lot of averages here around like 8 to 9%. I mean, the average shows 1286. That's a big move, and the broker is not expecting that at all. I look at price on AVGO, and it's kind of perfectly positioned for a crapshoot. I think that this is no surprise that price is high and low, and we're right in the middle, and we have earnings tomorrow. So does it blow through earnings one way or the other? Or is it just like NVIDIA where nothing happens? So maybe a plan on this one. And I don't know if this is going to be a good trade, but AVGO, if price were to, trying to think. I mean, sell the expected move. This is up $16. That's only 5%. I'm going to go out and see some of the averages. So average move. I mean, if I could sell like a 10% move, that'd be pretty nice. If I could sell a 15% move, that's way higher. 15% on a $305 stock, 306. Oops. So 15% on a 306. So that's a 45-point move. That's so big. I mean, do I do a bear call spread at 350 and hope that thing fills and fades? I don't think this is a good earnings play. I think the prices are set up to fail. I think if you're lucky on this trade, if you want to take like a very aggressive trade for like low risk, I would say price needs to stay within 318 to 280, 318 to 280. That's a plus minus, maybe 15, 20 points on either side. But I would not accept like crappy credit. So if I went into the 305, 307, went 15 wide, take this down to like the 292, I went 15 wide. I mean, I can risk $300 to make $12 if price stays within my range. I mean, I don't love that trade because it's clearly able to push way higher than just that 5% expected move. Yeah, I don't like it. I don't like it at all. I wouldn't trade this with earnings. I think it's going to be too much of a disappointment. If we have a big blowout move, then yeah, the long traders get super lucky. And if you don't, then I just don't find a good mechanical trade when these earnings percentages are so far off. We have these really light, tiny little movers, and we have like this blowout move. So I'll take this one step further before I make my decision here. Post earnings, in one day, how often have we hit, like, this is the day of earnings, -5%, plus 8.64, 24%, -10, 12, 7. That's a big gamble, right? And so if I'm going to take a trade where I'm like, I'm trying to contain price, I 100% cannot take a trade that's going to cost me a lot of money, right? So I am wondering if we see like a 15% move, which is 45 points away. It's like I don't think there's any way this trade is going to fill, but I will entertain myself. And if I went 45 points high, that would be a 350. That's way the fudge up here. If I sell a 350 by 355 and try to get this thing filled for $3, and let's say, you know what? Let's do this. Let's go out another week to the 12th or 19th. I'll go to the monthly expiration. I'm going to go 350 by 355, and if this thing fills for $3.50. So I'm only going to risk $1.50. So 350 out of 5 is a 70% credit. I'm only risking $1.50 on the trade. In order for this to get filled, price is going to have to go higher. If it doesn't happen, I don't get filled. But I'll put this pending order in based on what I think is a fair expectation of about a 15% move. 15% move divided by, or times rather, the 306. Yeah, I'm going up about $45 and I'm going out here about $45. So I'll place this order on AVGO pending trade. So it's not filled right now. That's about the only safe way I could see myself trading this thing. Low risk, high reward, and price has to come to me. Right? We have 12 minutes to go. If we're lucky, we're going to see the market move maybe a few points lower, but it looks like it's just going to hang out here going into that 90-95 zone. Super disappointing day. Like good call walls at 75 and 80. Market didn't give a crap about them. I think market makers probably just rolled the risk of tomorrow and they'll just defend it. I think tomorrow we're going to see the market flatter down, and that's this is what it is. That's like the good and the bad with 0 day. Sometimes it's really nice and market makers are spot on, and other days it's like, yeah, we'll just roll this hedge over to the next day, and then we're getting kind of beat up on a 1 day trade, which is why I keep saying this, but managing risk is the most important thing. I'm going to lose about $800 today. If I'm dead wrong, if this doesn't come back to 85, I'm down $400, which is fine. It's annoying, but it's fine. But on top of that, I have $1, $2, $3, $4, $500 worth of profit sitting out by Friday and Monday with a potential $2,000 profit trap as well on a couple of trades. So when it's all said and done, it could be a net winner. It's just maybe going to take it till Monday for me to get my net winner. Okay, what else is going on? Joey talked about AVGO. I've been in for about 2 weeks, considering just holding and selling what I got left. Yeah, I mean, Joey, a collar trade wouldn't be a bad idea. I don't know what you're in. I don't know what you're doing. I don't know what you're in for. Do you just own the shares? Do you have any trades running? I mean, if I own shares, look, I'm just speaking for myself. If I had shares and this thing's up 100+%, I'm freaking buying a put and selling a call. And if price goes lower, if I wanted to own the shares, I'll keep them. But that's a great run to have for the year. I wouldn't mind taking the profit. But if you want to keep it in the portfolio, then you buy a put, you sell a call, you finance that thing, it goes down, and you take profit down here, and then you reestablish a much better break-even position. So that's not a bad way to look at it. All right, what else? Let's go to some currencies. We've got about 10 minutes left. Currency strength, not a lot happened. Unemployment for tomorrow, a non-farm payroll, currency strength. New Zealand weak, Aussie weak, dollar up, fading. Not a lot of volatility, but pull back on Aussie dollar, pull back on New Zealand dollar, Swiss and JPY CAD in the middle, dollar, pound, euro on top. Again, I have seen very, very few big volatility days in Forex this year. We've seen a couple of one-off moves in the pound, a couple one-off moves in the yen or the dollar, but they tighten up so fast. All this changes too. I don't know what the big shift is. I do wonder when the Fed starts to cut. I think that the Bank of Japan is forecasted to raise rates through 2026. I do want to say this. I want to put it on your radar. One trade that we should be watching for a potential monster trade would be the deleveraging of the Japanese yen carry trade. Okay. What is it going to look like? Well, the starting trade would be if we break this structure here. So all this chop, all this noise, if we break this structure, Looking to start participating with bearish confirmation. If we break the neckline, this is a 2,000 pip trade down to 120. Okay. I just got filled for first a-hole. I got filled for 475. I'm going to lose on that trade. I'm only losing $25, but what a stupid effing trade. That's why I put it up to 475. So it's late enough in the day. I've got 8 minutes left. Unless just this thing drops hard, I need to see like a 9-point drop in order for that to be worth anything. So this trade is another broken wing. Group. Okay, and then I took the 85 by 90. I'm in here for a total of $1 plus 475 divided by 2, so 238. But if price doesn't fall, I'm going to lose $400 and another 25. So it's not the end of the world on a risk, but that's just a stupid trade here in the last 8 minutes. Yep. I know this market doesn't give a crap. It's just like run it up and it's probably going to fade. I'm telling you, like market makers most likely just roll the risk to tomorrow and they're going to play the game tomorrow. So if we blast higher, we hit all-time highs, we're probably fading that move tomorrow. We hit this gap level, we test all-time highs, we probably fade it tomorrow. So it was one of those stupid little days where just the market wasn't interested in responding to resistance. Call wall didn't matter. Put wall obviously didn't apply because the market was just drifting higher all day. So one of those freaking days. But we'll see. Swiss yen. Yeah. So dollar yen, I'll go back to this currency wise. I just want to put this on the radar. Like I said, if we break this structure, if you're following the currency trades, if we break this structure going down to 140, if we break 140, we're going down to 120. So 140 down to 120. I'm not saying I want to participate super early in this trade. If this is going to continue to do this and this and this and this isn't the trade that I want to be in, right? It's when the structure breaks. It's when it's going to start going bear flag style. Now I want to be in that trade. That if that trade comes to fruition, that's also going to be a major risk off event. So I don't think this would be super exciting outside of being a currency trader because the equities market will most likely show a lot of de-risking and a lot of deleveraging. Okay. All right. Swiss yen. Those are the two that I've been watching and talking about the most. I think they have the cleanest setups. Swiss yen, same type of thing. If we go high, low, if we go slightly higher and then break the right side of the trend line, I think that's a beautiful pattern to take us back down to these lows. So watch for a topping pattern here on Swiss yen. Okay. If we go high, low, lower low, we pull back, we find a flat pattern, stop loss above the high, and we sell off and we proceed to go lower. And now this market's going to try to pin at 65. What the fudge, man? All effing day. Look at this stupid thing. Just doesn't give a funyun. And we're coming right back into this gap. 65.01, 5 minutes to go. Mission accomplished. Crazy. So look, it's just price action. Oh, son of a bitch. Sorry, I just got filled on a trade here. This is stupid. Come on, man. Respect the high. Give me a second. Did both these get filled? Ah, nuts. I've got to go 65. I got filled here at 47.50. Let me see if I can grab. This probably isn't looking good either. Probably a little bit of over trading on my end today. Not much. It's all small risk, but I need to manage my way through this trade. This is a trade that filled for 47.50, and take this one down. Okay, so I'm in here for 47.50. Can we reject any of this? 47. Grab a quick $50, maybe. I mean, come on, man. Like, give me a fade. Like, hit 5, go down 5 points, do something beneficial. This is so stupid. All right. I want to see. I mean, I want to see if this will get back down to like 47.50 or lower. I'm just going to set a take profit here, 46.50. Okay. And then this one, set a take profit, 26.50. Oops. 26.50. All right, we'll see. I need a little tiny rejection. Little tiny rejection. 47.50, 27.50. Like one bear candle at the top would be great. Son of a biscuit. And now the freaking strikes just keep going up. Look at this garbage. 6,500. Why not? Why not? Unbelievable, man. Like, we are talking the slowest move to 100% ATR that I've seen in a long time, and probably a 1 delta got hit today. Maybe even a 0 delta, honestly. Like, this was such a ridiculous move. Like, 60, it's up 40 points with a market maker at 20. So it doubles the expected move. We exceed the 100% ATR. Like, F&A cotton. 2 minutes to go. It's all or nothing. Frustrating day. I mean, again, for me, like my personal trading, it's like I just took a couple stabs at the highs and market didn't care. So that's on me. Net, I'm going to lose about $600 today. Oh no, I take that back. I'm going to lose about $800 today. Sorry, $800. I mean, we poke 65. Do we have anything in us to go down a couple of bucks? Gosh. Super annoying, man. Yep, I know. I know. That's what's crazy. Like, look at the heat map today. Let's go Finviz. I mean, 56% of stocks advancing. You've got stocks up. I mean, Amazon's up. That was like the big shiny green today, but I mean, not super impressive. Not 60, not 70%, but market cap, man. Market cap weighted. Damn it. All right. 64.99, 6,500. I'm taking a little heat on these trades. If it's settling at 65, I'm just down a couple bucks. Super, super annoying. Well, that makes for a very interesting Friday, to say the least. So if market makers did what I said, which is they're rolling risk to today, I've got some pretty serious resistance levels up here. Do we poke the highs? I mean, obviously timing is everything. So I've got some risk displayed up here. I'm putting some risk on these broken wings. But if we are going to fill this pocket, stall at these levels, fade off these highs, there's life after all. But what a run up right into non-farm. And I will say this, the lesson here is, if you look at a rising wedge, I mean, I thought we had the semblance of it, but that is a bullish candle. This is a bullish hammer. And we were right here at the brink, and price just never really convincingly closed. So that rising wedge is right there. So do we, come up and poke these levels? Yeah, maybe. And then maybe it matters. Maybe it cares. Maybe it rolls over. But, it is what it is. Like, today was not in the cards. These are literally like 1 deltas that were hit today. That's really frustrating. But you win some, you lose some. So manage risk. Let's see how I can survive for the remainder of the week and weekend. So this is up to $500 of profit, which would be fine. A profit trap would give me another bonus or so, but I'll just take tomorrow in stride and just trade fresh. Don't do anything silly. All right. What else? All day, man. Any shining stars today? 50+% green. Amazon was the big winner, up 4% today. I don't know, fair amount of green. Anything over 60% is pretty impressive in the S&P. Nothing is normal. Yep. Well, I mean, the market's normally pretty efficient. Today was not one of those days. Today just favored the melt up. And I mean, the big picture, it's like it's still a bunch of noise. If you think about where the market has been, this is very noisy. I mean, we did make a recent high. I don't know what the heck happened to my chart here. So let's go out a little bit. All this market's been doing is making a high, pulling back, making a high, pulling back, making a high, pulling back. So what does this mean? I mean, honestly, we'd probably make a high and then still pull back. I would imagine like through September. But like I said, time is everything. If I'm off and I'm timing this incorrectly for Friday, Monday, like I'm going to take on more risk. So, that's why this is not how I trade for managed accounts. Like this is my grind for like personal stuff because it's like there's a lot more trades. I'm a little bit more, I'm way more picky and strategic and meticulous and longer term. This day stuff, it's like it's you win or you lose. And days like this are really annoying. I'm not gonna lie. Like I effing hate losing days like this where I'm like, you do the right thing. You do the right thing. You follow a plan. You stick to some good mechanics and probabilities, and the market's just like, meh, not today. And you got to take those in stride. So don't get mad. Just keep trading. We'll be fine. So let's find out. All right, tomorrow's another day. Let's figure out what happens. So I'm going to take the losses on daily profit play. Those bear call spreads are going to be down for $4. That's fine. Exit at $5. $5. That's minus 400. Minus 400. And yep. So minus. I need to update. So I'm updating the tracker right now. Darn it. Okay, that's not exited yet. Not exited yet. Not exited there. Okay, bear call spread. So minus 400. And then we have 1, 2, 3, 4 broken wing butterflies. Come on Friday. Those workarounds, Joy. Under 25K, you can still trade 2 to 3 times a week. If you have another account, you can trade 2 on one, 3 on another. There's ways to work around it. You can also trade futures if you trade indexes. You can trade ES or MES. There's no pattern day trading. And I've said this before, and I mean this. I've got some pretty good sources that are pushing the CBOE and the CME that there's probably not going to be pattern day trading going into 2026. I think by Q1 or Q2 it'll be past, and there will be no pattern day trading any longer, which I think would be pretty nice. I think that'd be a nice win for the retail trading community. But the most important thing is manage risk, because it's like, sure, trade as much as you want. Obviously, you have to manage risk. So, all right, let's come back and do it again tomorrow. We had a great class this week, a 2-day workshop and double ups. Saturday, waterfall income webinar at noon. Daily profit play. Come back and join me again tomorrow. Today was a manageable loss. It was annoying. The market probably went to a 1 delta, which is very unusual, but it is what it is. So tomorrow's another day. Let's see what non-farm gives us. Expectations are pretty light. Market's looking for about a 75K job print. Average hourly earnings about 0.3, and unemployment rate 4.3. We will see how the market takes it price action wise. Are we going to print, less than 75K? Are we going to print 100K? What's interesting is the way the market is taking this news, right? ADP was a news event today, and the argument was like, well, we had an ADP miss, so it's just more cemented that the Fed's going to cut rates. So it's almost like if the market misses and we have like a 50K job print, the market's like, the Fed is going to cut rates and they're going to cut more rates, and the market loves it. Instead of like, holy crap, the labor market is really struggling, and that should be a sign of bad things ahead. But it's just the market doesn't care. So I think that the bigger factor tomorrow is not necessarily the jobs print; it's going to be the revision and whether or not the unemployment rate goes up. Okay. So we will see how tomorrow shakes out. There's a pretty big plus or minus because it's a non-farm event. We'll see what the day gives us. I've got some trades listed for tomorrow. I'd like to see price stay below 64.25 and not close above all-time highs. Poking all-time highs is one thing. Fading would be a lot better. I'm hoping we can fade. So, all right. Joy says a bit scared. So, Joy, you can trade options. You can trade futures options. It's the same way you're trading indexes now. You can trade futures options, and there's no pattern day trading. So it's still it's the same as taking a SPX trade, XSP trade, SPY trade. You just put it in ES or MES. They're very similar, so you can still do your option trades. It's rigged. I mean, probably, but like I said, man, it doesn't matter. It's like tomorrow's the day. If we survive and make money, great. That's the plan. If we don't, we got to manage risk. Make sure we don't lose our shirts. But again, I'm pretty annoyed with today. I feel like I've been saying that a lot lately when these markets just like we won't go down ever. But again, just to be fair, inefficiency right here, gap lower. What did the market spend all week doing? Just trying to find the inefficiency. So congratulations, it found the inefficiency. Now I wonder, does it actually show resistance? Right? Because every time we've had a higher high, we've also pulled back. And if we're about to see that, then great, bring it on. But what I don't love is trading the broken butterflies that I did at 60 and 70. We had a plus minus 50 on the day for tomorrow. Now those are a little bit more in jeopardy because a plus or minus here would be like, well, I'd be on the high end of the expected move. Now we're like only freaking 20 point, 25 points higher. So I need to see price very cooperative for my broken butterflies for tomorrow. And, tomorrow's final hour could be really interesting because maybe we get a profit trap. Maybe I get like a $500 bonus tomorrow, or maybe we just have a big fat rejection and I just, make $400. It's fine too. All right. Let's come back and do it again tomorrow. 9 a.m. tomorrow, daily profit plan. Come join me. Let's grind. I'll see you then. All right. Thanks. Bye.